Greetings from Costa Rica. It's Friday, June the 13th, 2025. We have a very exciting topic to discuss here on my Friday broadcast, where we're going to be going over 30-year fixed rate mortgages now being offered by a company called Second Street. We'll be interviewing Zach Kay, who is the founder of Second Street, about these new loan products that could fundamentally change the Guanacaste real estate market. Before we get started with my interview with Zach, I did want to do a couple of quick sort of housekeeping issues here. First and foremost, to mention that, over the coming weeks, we are going to include some interviews with lenders. We're going to be divulging information about different loan products and mortgages that are coming out for foreigners buying here in Guanacaste. This is in no way an endorsement of any one particular lender. All of this is meant as information. I am not earning commissions connecting people with these loans, and my intention is not at all to push people to take out loans. Instead, really, I just want to talk about the possibilities. If you are interested in purchasing real estate in Guanacaste, remember, I am a realtor serving the areas that extend from Playa Potrero up in northwestern Guanacaste, the Las Catalinas project. I serve clients who are working anywhere all the way down through Playas Avellanas Negra and Junquillal. That includes Tamarindo, Langosta, Grande, Flamingo, and the areas in between all of those. So if you're looking for real estate and you want level-headed guidance from one of the most experienced people in the industry, do be sure to send me an email. You can reach me at matt@costaricamatt.com. You can also get a V-book, my full resource with 20 chapters, videos about the basic real estate process and the typical frequently asked questions by visiting costaricamatt.com, clicking on the blue button that says V-book and filling out the form. One more thing I wanted to mention, we will have my next Friday field trip next week. It's been an extremely busy time for me, so I do not have edited my new Friday field trip. So look for that next week on Friday, June 20th. But without further ado, let's get to my interview with Zach Kay of Second Street to learn more about the loan products that his company is now offering. Stay tuned to find out more about other lenders that have entered the Guanacaste real estate space. Thanks for watching. Greetings from Costa Rica. It is an extremely exciting Friday because I am joined by Zach Kay of Second Street. For years, if you've been watching my channel, you've heard me talk about financing here as something that is really just not viable for the majority of foreigners purchasing real estate in Costa Rica. Zach and his team at Second Street say that they have a solution to offer long-term, wonderful loan products to foreigners purchasing property here in Costa Rica. Today, I'm going to grill Zach about Second Street. I want to know who they are. I'm going to ask him why they are going to be successful in a market where many other lenders have failed. We're going to talk about their source of funding and dig deep into how they're going to do business. We'll want to know about their typical buyer qualifications. We're also going to ask him about the loan terms and conditions offered in general. And we're going to ask him a few other things that I won't go through right now. Zach, thank you very much for joining us today. I'm excited to hear what you have to offer us.
Awesome, Matt. Well, seriously, thank you so much again for having me on. It's really a pleasure to get a chance to speak with you and to get to share what we've created with your audience. We're really excited for this.
Let's make it clear before we get any further. I do not endorse anybody specifically in the lending space. I'm not here to say that Second Street is the person that everybody or the entity that everybody should work with for lending. Today, we're here to learn about what they're offering. I want to see what progress they've made so far and also sort of set the stage so that we can follow Second Street as they do more business in Costa Rica, and really just sort of present this as an opportunity for people to evaluate themselves. So, of course, everyone out there should do their own research on Second Street or any lender that you might do business with. But obviously, for Costa Rica realtors like myself, if there were great sources of lending available, it would really change our market. So without further ado, let's start asking Zach about Second Street. Please tell us about who you are, who your team is, and just give us a quick overview of what you've been doing in Costa Rica.
Yeah, absolutely. And I'll just start by saying that I like talking to the skeptics the most, because everybody in Costa Rica, frankly, should be a skeptic of a new mortgage lender coming in. And so, I think with that said, I'm really excited to share what's different this time, and how we've actually really been able, I think, for the first time, to deliver a real lending solution in Costa Rica. So to answer your first question, who are we, what are we doing, and why? I'll start with a little bit about myself and then talk a bit about the company. So a bit about myself. I'm Zach. I'm the founder and CEO of Second Street. I started the company back in 2023, spent about 16 to 18 months getting ready for the company to actually launch. And we actually only brought our product to market towards the end of last year. And so we've actually been out lending in Costa Rica really only for about 6 months now, but it's been an incredibly exciting launch so far. Before starting Second Street, I had spent my career as an investor at 2 large hedge funds on Wall Street. So I've been based in New York City, and most recently I was an investor at Elliott Management, which is one of the largest and most well-known hedge funds in the world. We managed about $70 billion in assets at the time that I was there, across public equities, public credit, private equity, and private credit and private equity as well. And that's the role that I left to ultimately go start Second Street. Why did I do this? We ultimately built the product that we wanted ourselves. Back in 2021, I had looked at buying a property in Costa Rica and realized pretty quickly, talking to some real estate agents, that financing was not going to be an option.
Well, wait a minute, Zach, you did not contact me in 2021. So this is already off to a really bad start here.
Dude, okay, we'll edit this part out. I didn't
get your inquiry.
You might need to improve your marketing, Matt, if that's the case. I don't know how long
Ooh, yeah, absolutely.
Yeah, so it was back in 2021 that I called in for this, and I spoke to a real estate agent, and they told me very clearly there's no financing. And I really pushed, because to me that seemed pretty surprising. I had good credit at the time, fortunately I still do, and really couldn't believe that there was no one who would be willing to lend to a foreigner with the right credit and the right income for real property in a place like Costa Rica. And by the way, if your real estate agent is telling you it's not possible, it's definitely not possible, because they would be able to tell you something if there was even a snowball's chance in hell that it would work.
Totally.
And so from there, I started to do some research, because this seemed like an interesting problem. And ultimately what I found is that, local banks don't really see lending to foreigners as a core part of their business. It's something that they've talked about doing over many years, much more than something they actually do in practice. And I also saw that everyone who had tried to launch one of these businesses in the past had really struggled and had ultimately gone out of business, and frankly, ultimately burned a lot of people, including both realtors and clients. Because at the end of the day, they were not able to deliver on the loan product that they promised. In a lot of cases, even so dramatically as showing up to closings without the cash to be able to fund a close. And I can say there are even lenders in the market recently who have done that to their clients. And so to me, starting this business was a lot less about, can I figure out how to make a mortgage loan and offer it to a client? And it was a lot more about, how am I actually going to fund a mortgage business? Because mortgage lending is incredibly capital intensive. And so where am I going to find all the money to do that? If you have like $50 million and you want to come to Costa Rica and make mortgage loans, congratulations. The average loan size ends up being almost $500,000. You're going to do transactions and then be dead in the water. And if I was going to leave my job at Elliott, I needed to have a better solution than that. And so ultimately, we did the work. We found a publicly listed company in the U.S. They're a multi-billion-dollar U.S. mortgage lender, and they came behind us and backed the entire company. So not only do they back 100% of our mortgages, which means that we always have the capital to fund on a loan we approve. They're also our lead equity investor. So Second Street is an affiliate of a public company. They're a very important equity partner to us, and they're really in this with us for the long haul. So we're really excited about the resources that we've been able to bring to this to really create the first ever institutionally backed and reliable international mortgage lender.
So how much, we don't want to just talk about size, but how much capital has your institutional lender offered as your pool to make mortgage loans here in Costa Rica? Or what's going to be the limit for you guys?
Yeah, so really the great thing about having sort of a true institutional partner as opposed to like a line of credit or a more transactional relationship with a US bank or some kind of other investor is that we don't really have any kind of limit or cap on what we're able to do. I mean, I can say internally, this investor has set aside a lot of money to start buying paper from Second Street. You could say like a real 9-figure type amount as kind of a starting point. But really, that's not the right way to think about the resources that we have access to. Because at the end of the day, our investor has an $8-9 billion balance sheet. 100% of that balance sheet is used to invest in mortgage loans from us and from other originators. And so ultimately, we're going to try to do as much with them as we possibly can. They want to see as much of our paper as we can give them. If I could give them $500 million or $1 billion, they're ready to take it. So at the end of the day, there really isn't, a hard cap on what we're able to do, which is what makes Second Street a sustainable business. You don't want to have to think, oh man, is my lender close to their cap, and are they going to be able to find the next, amount of money that they need to keep making loans, which is the sort of that others have been on that they ultimately fall off of. And so we've, really for the first time been able to escape that trap, do something differently, and build something reliable and sustainable.
Excellent. Yeah, I was going to say, to me, it's key to understanding, what is your proposition that is going to be different this time? Yeah. Simply because as someone who sticks to a very strict formula of pattern recognition, yep. I've met a lot of people, who have either attempted to start or who have launched lending businesses in Costa Rica, and maybe they do successfully make some loans. However, I've never seen anybody scale their business.
Yep. And I'll say, I see really two critical things that we're able to do differently. One is to be that reliable institutional player that you never need to worry about. We're never going to create risk to you as a realtor or to one of your clients. What's happened in the past when you work with a lender who, let's say is a spin of the roulette wheel, when you don't hit your number with them and they're not able to bring cash to closing, and this has really happened both recently and in the past, your lender doesn't bring cash to closing, and as a buyer, you might lose your earnest money deposit. You could be on the hook for serious cash because a lender doesn't show up. As an agent, you're going to lose your commission on that deal, and everybody ends up with egg on their face in that kind of scenario. The other thing we're able to do differently, also, I'll just say this first, is because we have real institutional capital, that also means that we have the best cost of capital that this industry has ever seen. And, I think in more consumer terms, that means that we are able to offer better rates and better terms than any other lender has really ever been able to bring to Costa Rica. The loans that Americans are used to getting back in the States. In 2024, 92% of mortgage loans were 30-year fixed loans, right? That is the bread and butter American flag product that everybody knows and loves because it's a great product. It's like the most consumer-friendly mortgage that you can find anywhere in the world. And we've actually been able to bring that to Costa Rica. So Second Street exclusively offers a 30-year fixed rate mortgage with no prepayment penalties. So you can also pay it off or refinance it anytime that you want. You can always get access to the lower rate, but your rate's never going to go up. And we're also able to offer that at a rate starting at just 8.75% right now. And this is June 2025. So
Yeah, I was gonna say, let's make that clear too. Everything that we say here is subject to change, and a bunch of other disclaimers that we should mention. But as of right now, yeah, Zach is talking about 8.75% as a product. So you said exclusively 30-year fixed mortgages is what you're offering.
Yeah, that's right.
Okay.
For us, offering the 30-year fixed just made the most sense because offering an adjustable rate mortgage, I mean, frankly, most clients don't really like them. People like having the predictability of a fixed rate, and there's no prepayment penalty. So if you want to pay the loan off early, or if interest rates go down later and you want to refinance, you can always do that. That's completely at your option. So to me, there was no reason to offer an adjustable rate mortgage because the product that we have is kind of already the gold standard one.
Yeah, absolutely. And right now I was trying to pull up, you had it when we spoke the other day, the current average for the 30-year fixed products being issued in the US is currently a pretty high.
Yeah.
What was that?
It's right around 7% right now.
Yeah. And this is, so this is a very, for people who have also been watching my channel for a while, something that has fundamentally shifted, and that when I started talking to Zach, I thought, oh, I do actually want to start bringing this into the channel more, is that we're now at a point where the split between US loans and what Second Street is offering. Now, at least if you close this 8.75% loan, I know that people have to qualify. We'll talk about that. The collateral has to be there, blah, 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 blah. But we're closer than we have been in so long, where, 5 years ago, I would tell people, oh, a private lender is looking for 10 to 12% interest on their hard money loan. And that was 6 or 7% more than they had to pay for money on their HELOC in the US. So it made no sense for people to even contact those possible lenders. Ever since I talked to Zach, I mentioned the possibility of a mortgage to a couple people at these rates. And yeah, their eyes sort of lit up like, oh, wow, that's not as bad as I expected a Costa Rica loan to be. So let's go back a little bit and now talk about, give the viewers out there a quick idea. What is your buyer profile? Who's going to qualify? I also would be interested to know, a lot of times lenders only want to work with certain types of Costa Rica property as collateral. Tell us how you're qualifying people in general terms, because I know that can change as well.
Yeah, absolutely. At a high level, the best way to explain it is our qualifications are generally the same as what you would see for most US mortgage programs. So if you're someone who would qualify for a mortgage back in the States, odds are you're probably going to be able to qualify for a mortgage with us. If you're thinking about the actual requirements for a borrower, I mean, they're fairly generic. I mean, we're looking for people with good credit, of course. That might be the place where we're the most different from a US lending program. In the US, you can get a loan even if your credit is not that great. Like, let's say, you have a 660 credit score, you still might be able to get a mortgage in the US. Unfortunately, you won't be able to get one with us yet. We generally start at around 720 or so. That said, if you are a potential borrower and you're watching this, don't trust what you see in Credit Karma, because the credit score that we see is actually a little different than the one that you see. So better to let us check your credit if you're not certain. If you've got a 600, it's probably not going to be that different. But if you have good credit, if you have a provable source of income that shows up on your tax returns, you're going to be able to qualify for a loan with us. You could be self-employed, you can be retired, as long as you have the sufficient assets and income that we can underwrite the same way a U.S. lender is going to look at it, you'll be able to qualify for a loan with us. And when you think about the types of properties that we're looking at, we're a residential lender, so we're not lending against commercial property, but we're lending against, homes, townhomes, condos. We're very flexible in terms of what that residential property is. It could be a condo in a tower on the beach, or it could be a single family house up in the mountains. Both of those are going to work perfectly fine for us.
And your collateral, just to make it clear for the viewers, that collateral is all here in Costa Rica.
100%. We are not taking any of your U.S. assets as collateral for this loan. This is a loan against the property in Costa Rica.
Excellent. And do borrowers end up signing a U.S. promissory note or some sort of direct financial contract with you up there, or is all the legal documentation down here?
Yeah, that's a great question. So
I was gonna say that was not on our list. My apologies.
No, that's okay. It's actually a great question. So the legal documentation, for the most part, is actually in Costa Rica. Now that said, there are some clauses in the credit agreement that we have that allow for the enforceability of the note in either the United States or in Costa Rica. The reality is, even if you didn't do that, a lender could still enforce a claim from Costa Rica in the United States. So even if, like, Matt, you just lent me money in Costa Rica and I decide not to pay you, I promise I won't do that. But if I did, you would still be able to go after me in the US. So, it doesn't really change anything at the end of the day, but it does, I think, make it quite clear just, what you're signing up for.
Yeah.
But it's really no different than what you're signing up for when you get a US mortgage.
Okay. I want to go back to your loan terms and conditions. We didn't really cover what down payment are you expecting buyers to make on their Costa Rica property?
Yeah, no, that's a great question. So generally on a purchase of a property, Second Street is asking for at least a 30% down payment. Sometimes we can make exceptions and bring that down to as low as 25%. So, up to a 70 to 75 LTV. We're usually trying to stick to 30% down. But like I said, depending on the situation and the client, sometimes we are able to make exceptions when needed.
Okay. So to sum up, fixed, I'm trying to type this in as I also think and talk, fixed rate mortgages and from 8.75%. And importantly, you said no prepayment penalty.
Never.
All right. So you would say that this is essentially the rough outline of what you're offering. You did want to see buyers with sort of that 720 credit score, really solid credit, because that's obviously going to be one of your top qualifiers. Now, to me, 70 to 75% loan to value, I think that's extremely generous of you, just because, frankly, one of the other points that I would emphasize on my channel a lot is that right now, as of June 2025, there are certain properties and certain markets that are definitely going to have inflated price tags. Will your loan to value ratio be based on your own independent appraisal, or are we talking against the sale value?
Yeah, so just like any mortgage loan that you would get back in the States, Second Street lends against the lower of the purchase price for your transaction or the independent third-party appraisal value. And that is the exact same as any loan. It's, the way any loan in the States would work as well.
Yeah.
What I will say is that, we really do go to great lengths to figure out what that accurate market value is for the appraisal. We've worked pretty closely with our appraisers to, replicate sort of the US methodology for appraisals that you don't typically find down in Costa Rica, because, there is a lack of market information down there. But we've really been able to replicate that methodology with some of the best appraisal firms in Costa Rica to, whenever we can get the right information, really get as close to the, right and just accurate market value as we possibly can. It's not Second Street's job to tell you what the property is worth. Ideally, the market is telling you what the property is worth, and the market's
Yeah.
opinion change definitely. But that's why we're at the moment we're generally only going up to a 70% LTV. And it's also why we're looking for people with good credit. You as a lender, of course, especially as a lender starting a new business, you don't want to end up in a situation where you're in a market downturn and you have people not paying. Even if
Totally.
the value of your property goes down, let's say you buy it for $1 million and the value goes down to 800,000 with the swing in the market. Most people are not just like jumping to sell their homes and take a hit when that happens, right? You make your mortgage payment and you wait for the market to recover. I mean, you could frankly argue that's what's happening in a lot of the U.S. right now, right? Interest rates in the U.S. have shot up. Transaction volume in the U.S. for property has gone way down because there's a difference between what people are willing to sell at and what buyers are willing to pay. And instead of, prices just collapsing in the US, because everyone has a fixed rate mortgage, you don't have forced sellers like you did in 2008 when people had adjustable rate mortgages. And so just hold on until things change. And so, we think with our product, you'll end up seeing the same thing.
Yeah. And I mean, it's, to me, it's also a bold time to be offering that 30-year fixed product in Costa Rica, simply because it's a huge commitment on your part and to the capital. Interest rates here ever getting to 8.75% for foreigners buying houses, to me just sounds sort of like the lowest, that it would be difficult for rates for this type of loan product to be ever much lower, given the risk involved, given the difficulty of really understanding the value in Costa Rica. And, it's a murky market. Many have failed before you because of the difficulties. And anyway, let's move on. I want to ask you a little bit, sort of on the timing side. If people, it sounds like, you're pretty flexible on the type of properties that buyers can purchase with your mortgages. When in a buyer's search process should they contact you? Do they need to be working with you 6 months in advance of their, real estate trips in order to be fully set up? Or how do things line up on the timing end?
Yeah, so I'll say, just as like best practice advice, I would tell you early and often is better. And that's not because you need to. Second Street works very quickly. We can do a loan with a client, end to end, typically in 45 days or less is what's most common for us. The actual getting a pre-approval from us can easily be as fast as 12 to 24 hours if the client is giving us the information that we need to be able to do it. Oh yeah, we've done them as fast as overnight. Get the application from a client at 10 p.m. They really needed it the next day to make an exploding offer. And we had that pre-approval for them done, by 9 a.m. the next morning. Now, They don't all pan out that way, and they don't all typically need to pan out that way. But I'd say, if a client is submits the application, gets us the documentation that we need, a 24-hour turnaround, unless we need more docs or there's something we have questions about, would be pretty typical. The reason I say that clients should come to us early and often is just because, if you're going to go shop for a property in Costa Rica, you probably want to know what your budget is, right? And so it's to go get pre-approved. So just like getting a loan in the States, actually better than getting a loan in the States, you can get a pre-approval letter from Second Street. And what's better about it than the typical pre-approval letter you would find back home is we're doing a fully underwritten pre-approval. So, we're not just asking you for your income and assets and you tell us what it is. And, it turns out when we get your documents later that, maybe the numbers weren't exactly right. And now you can't actually afford homes in the price range that you were looking at. No, we're actually going to do a soft pull of your credit, which doesn't impact your credit at all, by the way. We'll do a soft pull of your credit. We'll look at your documentation to make sure the application lines up with what you're able to prove. So we can actually send you a pre-approval letter saying, congratulations, Matt, you've been pre-approved to borrow up to $500,000 with Second Street. You can afford, with this, you can afford to buy a home for, $700,000 or $750,000, whatever it is. So you know exactly how much you can borrow, how much that's going to cost you, and you know the total purchase price of a home that you could actually go shop for. And you'll have that on there, and you know that Second Street has seen all of your documents, and so there's no risk that we're going to come back later and say, well, actually something wasn't right, you can't afford that. And so once you have the pre-approval letter, now you can go shop, and you're not going to waste your time. You're not going to waste your realtor's time looking at $1 million homes when you can only look at ones for 400,000. But you're also not going to waste your time looking at $500,000 homes when you want and can actually afford $1 million house, which is actually what we do often. If you have to go buy a property in cash, maybe you have $400,000 to spend in a lot of nice areas. That doesn't get you a whole lot anymore these days. But if you have $400,000 to put down and you're borrowing 70% from Second Street, well, now you're borrowing a $1.2 million property. You're really you're cooking with gas.
I have to say, I think one of the rites of passage for most new Costa Rica realtors is when they've been working with a fresh client and they're really excited because they get close to like interest or an offer on a property, and they find out that the whole time the client has been expecting to have access to mortgages.
Yep.
All of us had that, like we were rookies and our first deal appeared on the horizon, and the buyer looks at us after like 6 days of touring and like, yeah, I love this condo. It's the right one. It's the right price. Now, who do I talk to for my mortgages? And you'd be like, heart-stopping, tragic moment.
I think for better, no one's going to have that hazing experience anymore.
Well, let's hope. That's what we're absolutely hoping for.
Yeah. And one other thing, Matt, that I realized I should have mentioned when I talked about the types of property we lend on, I should clarify right now, Second Street we don't do construction loans, and we don't do loans against loans. So you do need to be purchasing a completed property. It can be a brand new property, and if you're purchasing a pre-sale, we work with a lot of developers to phase the loan such that Second Street is basically funding the loan at closing when the property is actually complete, and you're only putting up a deposit plus some milestone payments before closing and the property is actually finished. So if you're looking at a pre-sale, definitely come talk to us. We have plenty of solutions for that. But if you're looking to, let's say, like buy a lot and do like a custom build on it, generally our advice is go ahead, buy that lot, put a home up on it, and then come to us for a cash out refinance, because we can refinance the property once it's complete. And so you may have to sink in the cash up front for it if you want to buy a lot and do your own custom build, but you will be able to recoup your cash on the back end.
Okay. Now, for me, the most important thing, the proof is always in the pudding. You've been open for 6 months now. Have you closed any loans? How many have you closed? Or give us a general ballpark, whatever you're comfortable sharing. And give us a little bit of your resume here now that you've been cracking at it for the first half of 2025.
Yeah, absolutely. I'm really, really excited to talk about it. So we started taking our first applications really kind of like getting into the holidays and around New Year's. We had already started closing on our first loans by February. So it was really exciting to see just how quickly it happened. Our first transaction was, back in February. It was $1 million property in Playa Grande. The client borrowed over $700,000 from Second Street to fund this purchase. And by the way, we saved this client several $100,000 in taxes, because alternatively, he was planning on funding this purchase with a withdrawal from his 401k, which was going to involve a major tax hit. So it was very smart for him to bring us in. We got him the loan done, closed on time. We closed our first transaction on time, which I thought was pretty cool. We got him a great rate, great terms. He was super excited to have the 30-year fix like he would get back in the States. And he wrote us a really nice testimonial. If it's not on our website already, it will be soon. And so that was our start in February. I'd say, since then, if you're looking at like loans that are in the process of closing right now, plus ones that are already closed, you're talking about dozens of loans. So we're dozens and millions of dollars in loans. So I'm really excited about the reception that we've seen. The first few months in the market, there's definitely some skepticism. A lot of people weren't sure that this was real. A lot of realtors, think about this as, oh, I don't want to risk one of my deals by introducing financing into the picture. But I think the reality, the opposite's going to happen, where financing is really becoming and will be an incredibly important part of the real estate market, and a critical ingredient to making a lot of deals happen. Because I'll say, even a lot of clients who can afford to pay cash, they would much rather be borrowing. I mean, we have one client we were talking to who's, without sharing much information, he's got a lot of assets, and those assets have appreciated very nicely. And instead of selling those assets and paying hundreds of thousands of dollars in capital gains tax to go have the privilege of buying a property in Costa Rica, he can just borrow money from us instead. And he's borrowing against the property. He's getting a predictable payment and a great rate. And it plays out really nicely for him.
So, the one thing I want to commit to everybody watching today is that I'm putting on my calendar that in 6 months, I'm going to be bugging Zach again to come back on the channel and give us a progress report. I'm absolutely one of the people that when I got an email, oh, there's a new lender, 2nd Street. And I think I smirked, took another sip of coffee, and I didn't send the possibility to any one of my clients. Just like you didn't call me and take me seriously, I did. Because for me, yes, us realtors have seen this offered many times. Now what has changed for me is that, yes, I do know you've closed some loans. I had an independent testimonial from someone that I trust who said, hey, we've been sending a lot of people this way and things have been working out. They've been, referring to 2nd Street. It's actually another lender who does more like really small loans. We will probably have that team on my channel eventually as well. But he said, for actual full purchases, we've been sending people to 2nd Street. And that to me was the first notch in the credibility. Now hearing that you've got dozens of deals in your pipeline, I know you've had close to a dozen, some solid transaction volume so far this year. If you keep it up, to me, it's, because of the tax benefits. I have so many clients who are in that situation where they're 59 to 63 and they're going to be facing massive penalties investing any significant chunk of their nest egg in a Costa Rica property where financing it would be structurally better for them, at least for 5 or 6 years. And yes, assuming there are no prepayment penalties on the final mortgage, really they're just given the option of avoiding those tax hits from the missed timed withdrawals, really timing things on their front in a way that works and only putting that 30 to 25% perhaps down. So my final question for you, Zach, would be, what is your application cost? And obviously we need to provide people with the first step information if they want to reach out to 2nd Street to apply for a loan.
Yeah, absolutely. So applying costs absolutely nothing. You will never pay $1 to apply with 2nd Street. In fact, you don't pay anything to work with 2nd Street unless you close a transaction. You're never going to pay us $1 until we are actually at the closing table and funds are coming out of escrow. So there's absolutely no cost to apply. There's frankly no reason to hesitate if you want to get in touch, ask questions, or submit an application with us. And when you're ready, you should, first definitely check out our website because we've got some great information on there. It's www.mysecondstreet.com. And that's all spelled out, mysecondstreet.com. And you'll see a big blue button on the homepage to pre-qualify. And that is the link that you can follow if you want to submit your contact information to have Raj, our senior loan officer, reach out to set up a discovery call with you. So, the first step, if you reach out either directly to Raj or through the pre-qualify link, is just to have, like a 30-minute introductory call with Raj. You'll definitely have a ton of questions. That's absolutely okay. Raj is going to be able to answer all of them and walk you through everything before you submit an application, because there's no point all this time submitting an application if you don't actually understand it yet, or it's not something that you think you really might want to do. And so we always start with that introductory call before you actually go through the application process. That pre-qualify link is really just submitting your contact info. It should take you like 30 seconds to fill out. But I think what Raj is going to be really exciting. You're getting that 30-year fixed rate benefit starting at 8.75 as of June 2025. And even if you're looking at the closing costs, you basically ends up being the same as buying cash.
I was about to say, I did not cover, and somehow we missed the question. What are the closing costs on your loans? What kind of points are we talking about?
Yeah, so I think the most helpful thing is to just talk about, like, if you're comparing this to a transaction buying cash, what's going to be the difference? Because that's what you're looking at, right? You're looking at, I'm either going to buy cash or I'm going to buy with financing from Second Street. And at the end of the day, the total closing costs end up being very similar. Almost in some cases exactly the same. In other cases, maybe up to like a point additional. So, if you're buying a property in cash in Costa Rica, you're generally going to end up paying something like 4 to 5% of the purchase price in closing costs. And that number is, usually spot on, pretty similar if you're if you're loan with us or buying with a loan from us.
Okay. And
that includes everything. That includes legal fees, tax, lender, that's an all-in type number.
Now, buyers, when they work with a Second Street mortgage, but this initial transfer with the 4 to 5% closing cost, that's going to put the property in the name of a trust, if I'm not mistaken. Is that your legal setup? Okay.
Yeah, so to just explain, the legal setup for how a loan works in Costa Rica, if I'm talking to an American audience, and right now we don't take Canadian borrowers. That's something I should have said earlier, is we can only
don't worry.
We can only lend to U.S. citizens and U.S. permanent residents at the moment. It's something that I hope will change in the future. But the structure of the loan is, it's pretty much identical to what's in the U.S. is called a deed of trust, which if you live in a state like California or Texas, is exactly how a loan is structured there. So, a lot of people think of a mortgage loan as putting like a lien on a public lien on a property, and then the lien gets removed when you pay off the loan. That can be true, and that is one way to do it. That's how some states in the U.S. do it, like New York, for example, and you can also do it that way in Costa Rica. Second Street has opted to do it a different way, which is to use what in Costa Rica is called a guarantee trust, and in like California or Texas would be called a deed of trust. And basically the difference is, instead of placing a public mortgage loan on the property, throughout the life of the loan, the title to the property is held by an independent third-party trustee. They don't work for the lender. They don't work for the borrower. They're an independent third party. The trustees in Costa Rica are also regulated by SUHEF, the local financial regulator. And so you've got a third party holding title to the property. There's an agreement called a guarantee trust agreement, which in a state like Texas would be called a deed of trust agreement, that governs the relationship between the buyer, the lender, and the trustee. And it's pretty simple. You pay the loan off, the title to the property gets released from trust and can go back to you. Or if someone else decides to buy the property before you've paid the loan off, just like what would happen in the US, instead of the title transferring to you, title will transfer from the name of the trustee to the new person who's actually buying your property. And, you'll obviously pay the loan off with the proceeds.
Yeah, and I was going to say, so then that paying your loan off will incur those additional costs there at the very final payment of your, mortgage. You'll be transferring from the trustee to your personal name or to your corporation, and that would even
if you did do that, you could potentially incur some transfer taxes in Costa Rica. Now, that said, most people don't do that. First of all, there are ways that you could structure around that to prevent it. And then, secondly, most people are not typically holding their home for 30 years. Most people hold it for 5 to 10 and then sell it and use the proceeds to pay off their loan. And in that case, there would never be any impact to you from that.
Yep, absolutely. No, that's exceptional information. Like I said, we're going to have Zach back on the show in 6 months. We're going to grill him then about how Second Street has been doing since June of 2025. It'll actually be Christmas. We'll be getting into the Matmas season then, so we'll look forward to seeing you then. I greatly appreciate you joining us today. For the folks out there who are ready to start looking at real estate here in Costa Rica, of course, you can always contact me by email at matt@cbpacificrealty.com. I'll be very interested to see how things evolve with Second Street. I will be sending you some loan applicants here in the near future. Absolutely a pleasure to speak to you today, Zach. Thanks very much for your information and for trying to solve a big problem regarding financing for foreigners, especially U.S. citizens here in Costa Rica.
Awesome, Matt. Well, seriously, again, thank you so much for having me on. It was a pleasure to get to speak with you, a real pleasure to get to speak with and get to know your audience. And I'm very much excited to come back and tell you what we've been up to in a few months. And hopefully I can get something done with you before that.
Yeah, absolutely. Maybe we'll be popping some champagne bottles on the next broadcast.
All right. Sounds good.
Greatly appreciate it. Have a good one, Zach. Take care.